Imagine owning your first HMO, a high-performing asset that produces high cash flow every single month. In this video, I'll be explaining exactly how you can secure your first HMO. Hi, I'm Adam. I trained as a surgeon, but these days I'm investing in HMOs with precision. And I bought my first 3 HMOs in just 10 months. In this video, I will navigate you through the uncharted territory of buying your first HMO step by step. And I'll be explaining a realistic scenario, purchasing a residential house for conversion into a 6-bed HMO using a bridging loan. And make sure you stick around to the end because I'll be tackling that chicken and egg question. Should you get the property first or the finance? Okay, so step 1. So before you even open Rightmove, you need to know your why. What is your North Star? Maybe you want true time, location, and financial freedom. Maybe it's about building generational wealth, something that will outlast you. Or perhaps, like me, you're looking for an additional income stream that works whilst you sleep and you can do alongside your busy, demanding professional career. Whatever your reason for investing in HMOs, make sure you write it down and create a vision board. It's this that will keep you going when things get messy and you need to persevere. And now for step 2, and that is property education. Now, many people say that doing a HMO is your very first property project is too advanced. And to be honest, I completely agree with them. That is, unless you have been trained with HMO specific property training in a rigorous, comprehensive course. Many beginners simply underestimate how much it really takes to find, fill, and fund a HMO project. And getting property education is not simply about knowing how to do deal analysis or how to spot a good HMO area. It's about getting the confidence to take massive action. When you understand the process and you have a network of mentors and fellow peers, trust me, every decision feels much more strategic and less risky. What I did was I invested £15,000 in property education. This covered 2 property academies and a property retreat, and this truly transformed my mindset and results. If you're serious about buying your first HMO, I strongly recommend that you invest in yourself before investing in HMOs. If you want to see my recent video where I dissect property education and discuss, is it a scam, is it a shortcut to HMO success, check that video out up here. Okay, so time for step 3. It's time to talk about money. Now, you might be in a fortunate position where you have adequate savings to purchase your HMO project on your own. If so, well done for saving and congratulations. However, I imagine the majority of you are like I was when I started out. I did not have sufficient savings on my own, so I had to leverage other people's money. Whilst working in my role as a doctor, I was able to leverage £65,000 of my own money to buy 3 HMOs in 10 months. To see the full breakdown of those deals, check out the video up there. Whatever your starting point, before committing to a purchase, you need to be crystal clear where your finance will be coming from. And top tip, make sure early on you engage with a HMO specialist mortgage broker. They'll help you understand what level of funding is realistic for your deal. They'll likely ask questions such as what rent would you expect, what level of refurb costs are you expecting to spend, and what would the end value be after the refurb. Now, don't worry if you don't know where to get those answers from right now. Make sure you stick around to the end of this video and all will be clear for you. Step 4, well, it's time to set up your business. Investing in HMOs is not for the faint-hearted. To succeed in HMO investing in 2025, 2026 and beyond, you can no longer be a casual landlord. You need to be a professional property investor and treat it as a business owner. I run my HMOs through a limited company. Now, the reason I do this is because it enables me to deduct my mortgage interest as an expense. This is simply something you cannot do in your personal name. To get started, go to Companies House, register your business, open a business bank account, and start treating your property venture like a business from day one. But a quick disclaimer as always, this is not tax advice. Make sure you speak to your accountant about your own personal situation and what is best for you. Step 5. Location, location, location. It really can make or break your HMO. You really need an investment area with strong, consistent rental demand. Only then will you get strong, consistent cash flow. Now, if doing this alongside a full-time job, like I am, then the best thing to do is to find a location that's within 30 to 45 minutes away from your home. For your first HMO project, I strongly recommend you do this outside of Article 4. The reason for this is this will enable you to convert a 3-bed terraced house or a family dwelling into a 6-bed HMO under permitted development. Therefore, you will not need a full planning application process and things will move much more quickly for you if you're on a bridging loan. Now, to check if you're in an Article 4 area or not, the best thing to do is to go to your local council website. That will often show a map, or alternatively, go to a website called article4map.com. Once you've chosen your town or city, it's time to go to micro locations. Walk the streets, do viewings, do spare room analysis, speak to letting agents and estate agents, find the exact pockets that work best for HMOs. And if you want to shortcut the process of finding your next HMO investment location, make sure you check out that video up there. In that video, I used ChatGPT to find HMO hotspots in minutes. Step 6, and it's time to start building those relationships with agents, and that's both letting agents and estate agents. Estate agents really are the gatekeepers to excellent HMO deals. So give them a call, pick up the phone, or better still, go and see them in person. Speaking with estate agents helps you understand where the good housing stock is in your town or city for conversion to HMOs, how much these might cost, and which micro locations, which streets are these found on. Have an elevator pitch ready, who you are, what you're doing, and what properties you're looking for. At the end of the day, after speaking to the estate agents, building that relationship and rapport over time, the goal is to get into their WhatsApp. You want to be the person they're WhatsApping when they find a new deal that's coming to market. Think of it as their black book. On the tech side, it's time to automate your search. So you go onto Rightmove, go onto Zoopla, go onto On the Market, set up automatic alerts so that they come to you and it spends minutes every day rather than spending hours. So great, you've spoken to estate agents, now it's time to speak to letting agents. These are the people who really know what tenants in the area look for in HMOs, what rent they're prepared to pay, what type of finish they want, and all those specific things such as what are the best streets, what are the best areas that rent their rooms most quickly. And if, like me, you work full-time in a busy professional career, you really want to start shortlisting HMO management agents at this early stage. These are people who really should have HMO experience so they know all the rules and regulation, and this will enable you to invest in HMO whilst working full-time. Step 7, and that means it's time to build your HMO power team. Now, you certainly can't create, build and run a HMO on your own. It truly is a team sport. So start building your power team early. Most important to help with the purchase itself are 3 main players. So let's go through them now. First, there's the mortgage broker. This is a person who ideally has vast HMO experience and can help you set up your bridging loan. Second, there's the conveyancer. So this is the person who takes on the legal process of purchasing a house. Thirdly, there's the architect, because relatively early in the process, you're going to need floor plans showing that it's possible to create a HMO from the house you have identified. And then it's time for your most important team player in all of your roster, and that is finding your builder or main contractor. Stay tuned to step 10 when I go into this in more detail. And once your offer is accepted and before you complete, your power team continues to expand. Here, you'll start engaging with a structural engineer, building control, party wall surveyors, and also interior designers. A key thing to remember is that success in property is not about doing it all on your own. It's about building the right team around you. Now, if you found this useful in any way, make sure you hit that like, hit that subscribe button, because in a future video, I'll be breaking down and sharing the exact power team I use when I invest in HMOs. Step 8 now, time to view and analyze deals. So when you start looking for HMOs, just crack on. View, view, view. The more properties you see, the sharper your eye becomes. Get to know what floor plans work for making 6-bed HMOs in your area. So what I'd recommend is starting simple, finding a 3-bed terraced house and converting this into a 6-bed HMO. If it has a lounge, this can become a bedroom, and find a house where the loft is big enough to create 2 bedrooms. This gives you a 6-bed HMO. I would recommend avoiding auctions and commercial conversions early on. I think for your first HMO project, you want to reduce risk, reduce complexity. So finding a simple residential house for conversion into a HMO is what I would recommend. Once you've found potential properties, it's time to do robust, rigorous deal analysis. This is what you would have been taught during your property education. If you want me to cover this on a future video though, let me know in the comments below. When doing your deal analysis, you'll need to look at various things, and I'll list them now. Key components would be what rent you expect to achieve, so you can get this from spare room and letting agents. Another factor will be how much you expect the property will be worth at the end. This is a gross development value. You can find this out by looking at comparable HMOs sold or speaking with local commercial valuation surveyors. Another important component is how much your refurbishment will cost. Personally, it cost me in the regions of £150,000 to £165,000. Remember to also include a 10% contingency, but the best way to get an accurate quote for your build costs is to speak with your local builders. And the key metric to look at when analysing deals is the return on cash employed. This looks at the return you get on the capital left in the deal after you refinance. And whatever you do, do not be waiting around for these unicorn, all money in, all money out deals. These do happen, but they're rare. What would I look for? Well, I would look for at least a 20% return on cash employed. And if you're getting above 30%, you're doing really well. Time for step 9, and that is making your offers. So you've analysed your deals, your numbers stack, it's time to submit your offers. Make sure you submit your offer both verbally and in writing. Act fast, it shows the agent you're serious. When emailing through your offer, make sure you attach all the relevant ID and documentation. So include your passport, include your proof of address, and include your proof and source of funds. These small details would give you instant credibility and set you apart from other investors. Once submitted, be ready to negotiate. This is all part of the process and the fun. To help with your negotiation skills, I recommend reading the book Never Split the Difference. And when that call comes through from the agent saying that your offer's been accepted, trust me, all your hard work to now will feel worth it, and that's your green light. Your first HMO deal is on. So make sure you pop the champagne at this stage, or whatever your choice of drink is, but don't forget to instruct your conveyancer straight away to start the legal process of buying the house. And next, instruct your HMO mortgage broker to apply for your bridging loan so you can purchase this house. This is when your deal really starts to feel real and momentum matters. And step 10 now, as promised, this is about finding your builders or your main contractor. When doing your first HMO project, in my opinion, this is where most of the risk sits. You want to find a builder who is going to do the construction well, to compliance standards, on budget, and importantly when using a bridging loan, on time. And that's why finding a reliable builder with proven HMO experience is absolutely critical. And here is how I did it. And a key step is to create your tender pack. So what I did was I got a OneDrive account, I created a folder called Tender Pack, and in this I had my floor plans. This was both the existing floor plans and my proposed floor plans. This also included the structural engineer drawings. For instance, this would help the builder understand what steels were needed during the project so they could price it accurately. Next, and this really is important, you need a detailed specification or scope of works. This is a line-by-line listing of exactly what you want done in the property. Now, if you want more details on how to do a tendering process for builders, let me know in the comments below. And remember, when choosing your builders, it's not just about price, it's also about how reliable they are and what experience they have. So don't necessarily go for the cheapest builders. That might hurt you later. Once you have selected your builders, it's time to write a JCT contract. What I use is the Minor Works JCT contract, and in this you describe the project that's going to be undertaken. You agree a fixed price and a fixed duration. And what's really helped me is if the project was to overrun, you can agree liquidation charges that would cover you for lost rent and interest on your bridging loan. So for me, for every month that the build overruns, I have a £4,000 liquidation charge. When applying for your bridging loan, many lenders will ask to see the builder's insurance documents, so make sure you ask the builders for those early as well and have them to hand. Step 11, this is all about paperwork and patience. In my experience, it's at this stage when momentum slows and your patience really is tested. In order for a formal bridging loan offer to be made, the lender will ask you to instruct a local valuation surveyor to go to the property, tell you what it currently is valued as, and also what in their opinion the GDV will be. That's the end value, the gross development value after the refurbishment. And when the valuation report is back, that's when you'll receive your formal offer from a bridging loan company. At this stage, if everything still stacks, fantastic, it's time to crack on and proceed. But in my experience, this bit can be painfully slow. So expect to receive inquiries from the lender's solicitors, expect to require lots of paperwork, independent legal advice, personal guarantees, all the rest of it. At this stage, you'll receive your loan agreements and many other documents. You have to get these signed and witnessed and often return hard copies back to the lender. The lender at this stage might also make many other inquiries, ask for additional surveys such as asbestos surveys. They might inquire about party wall agreements, and they'll also, if you're using investors, expect to see documentation of a contract for the investor loans and their source and proof of funds. Now, this paperwork stage can be slow, but make sure you use it wisely. Make sure you're preparing so that when the purchase goes through, you're ready to start your build right away. So get your builders lined up. Make sure you've got building control lined up. Make sure site security is considered. Because remember, every week you delay starting the refurb after completion is money wasted on bridging loan interest. So you really need to be organized here and get your ducks in a row. You can use this time to really optimize your plan for the build, start doing your interior design, but don't forget to get your buildings insurance to cover you for the duration of your refurb. That is often asked for by the lenders before completion as well. And a big tip, often at this stage, the vendor and the estate agents can lose a bit of patience and get touchy. So make sure you keep them informed, keep them warm with regular communication. Just an email a week should do the job. Step 12, and that is completion. So funds have been released, contracts have been signed, the house purchase is completed. Congratulations, once again, time to pop the champagne. It's a huge milestone. You now own your first HMO. So now it's time to turn that vision into a reality. Make sure your builder, your main contractor is on site as soon as possible. If you're working full time, I strongly recommend using a main contractor rather than individual trades, because like me, as a busy professional, you won't have much time spare, and therefore you don't have time to be managing those individual trades. So find a main contractor who can coordinate it all for you. Go visit them once a week, make sure the project is on track. If you want me to do a video explaining exactly how I manage HMO refurbs whilst working full time, let me know in the comments below. Now, as promised at the start of this video, it's time for that chicken or egg question. What comes first? The house or the finance? The smart move in my opinion is to speak to a HMO mortgage broker early. Once you know the range of house prices you're looking at and your day one cash available or capital to be deployed, your HMO mortgage broker can let you know what's realistic. This way you don't waste hours searching for properties that are outside of your price point. That said, things don't always go by the book. They certainly didn't for me. So I had my first HMO offer accepted before I'd spoken to a mortgage broker. That's when my first deal actually nearly fell through because I didn't have all my ducks in a row, but I managed to get it over the line in the end. If you want to see how a stranger helped me resuscitate my very first HMO deal, check out that video up there. And whether you start with the finance or start with the property, the key thing is to take small steps every day. Small steps compound into big results. Buying your first HMO will definitely test your grit, your problem solving and your perseverance, but trust me, it'll be worth it. Property does not move fast, it's more like an iceberg. So expect the process of finding the property, choosing your area, having offer accepted. That will take you about 6 to 9 months. Then the process of actually purchasing the house. In my experience, that takes between 4 to 6 months. and then your renovation itself will take about 6 months, and the process of refinancing would be between 1 to 3 months. So add that up and you're talking over a full year to finding your property all the way to having it fully tenanted and refinanced. But after that, it's all rinse and repeat. Once you've done your first project, you know the exact numbers for your investment areas and you can use the cookie cutter approach to go again. So that is how you buy your first UK HMO step by step. If you've liked this video in any way or just a little bit, make sure you hit like, hit subscribe, because I'll be sharing many more videos like this explaining how busy professionals can invest in HMOs whilst working full-time. And if you like this video, you're definitely going to like my next one. I'll be dissecting the best HMO strategy: students, young professionals, or social housing. So stay sharp and I'll see you on the next video.